what's your overall view on the activity we're seeing on the markets and what you're anticipating, more importantly, for the trading day ahead?
Good morning, Alishia, and thank you for having me. As you've already indicated, the Nigerian equities opened this week yet again on another negative note, essentially extending the trading losses that characterized the markets last week. In index terms, it extended these losses by an additional 139 points, approximately 0.6% off the trading level, the index level from the prior trading session. In terms of volumes, yesterday's volumes were somewhere around 270 million shares traded. Not very impressive in our view. Although it's important to know that quarter over quarter, quarter after quarter, since Q1, we've seen quite a significant pickup in volume activity. But while that's an important data point to look at in these parts of the equity markets, it's not very indicative, I think, of renewed interest in the Nigerian equity markets. And so, looking forward, going for the rest of the trading session in Q4, our view is that we're likely to see more of this sideways trading in a tight range. And from a technical perspective, we think there's limited downside risk in investing in the equity markets because of a number of the issues that were anchor recovery that have been addressed, notably the CBN's recapitalization of the banking sector, as well as continued liquidity support to the broader industry. And so while we see limited downside risk in investing in the equity markets, we think it may take some time before we continue to see significant appreciation.
Well, in this context, I mean, we've been speaking to traders all through last week, and most of them have highlighted that there's a strong distinction to be made between the participation we've seen from local investors and that we've seen from foreign investors. Foreign investors really investing more aggressively in the Nigerian markets right now, focusing on longer-term strategies as opposed to the short-term perspective that local investors are playing these markets with. In that, given that that's the case, I mean, do you see local investors missing the boat as far as valuations are concerned, missing out on some of the buying opportunity that currently presents itself?
Well, historically, I think majority of the trading activity in Nigeria has always been driven by the domestic participants. I think if you go down over the last 2 years, I think you only see foreign participation in the equity markets accounting for not more than 12% of the entire volume of shares listed on the Nigerian Stock Exchange. And so while some discerning foreign investors may be taking a new look at Nigerian equity markets, it's highly unlikely that they will benefit from a long-term investment in the equity markets that to the extent that the local participants will miss out so much on. I think in the long term, our view of the Nigerian equity market is very bullish. As a matter of fact, it's just a matter of what will be the new catalyst that will trigger renewed interest in the equity markets. And we've always maintained that the banks got us into this mess and that the banks will get us out of it. And I think when you take a look to see some of the important developments that have happened in the banking sector recently, I think we're getting closer to a point in time where we begin to see significant appreciation in the markets.
Well, talking about catalysts, let's get into earnings reports that have been released. Unilever Nigeria out with numbers yesterday, and that 128% growth in profit after tax, largely being attributed to the company's efficient cost management drive. What have you made of those numbers released?
Yes, Unilever reported, I believe it was a 17% increase approximately in top line growth to about 35 billion mark. Profit after tax, now that was the interesting data point, that increased by approximately 128% from about 1.65 billion in a comparable period in 2008 to about 3.8 billion in the 9 months period ended September 30th. 2009. That was very stellar results, by every regard. But it's still unclear to us what really contributed to this improved margins, because as you know, the NSE always reports just a number of data points. We already know what profit before tax and profit after tax, as well as the top line numbers were, but it's uncertain to us whether this improved margins happened at the operating level, or this is just at the operating level, which would obviously be devoid of one-time items as well as extraordinary items. But needless to say, this is very impressive results by Unilever. The stock, as you know, has done very well because it operates within the broader consumer subsector here in Nigeria, bolstered by macro fundamentals such as population issues, which always bode well for companies that operate within the consumer sector. And so the stock has, I believe, rallied about 51% year to date. In comparison to other companies within the subsector such as PZ Industries or Nestle, it seems to be trading on a forward 09 multiple of about 9.2x, whereas those other companies I mentioned are somewhere on average about 9.5x. And so, we don't see much upside, from an investment perspective. We think that the stock is appropriately priced, at least relative to its comps. It is, but it's possible that we might see some gains going forward.